All right, let's get right into it. Something really interesting is happening with one of the biggest names on Wall Street, JPMorgan Chase. They're making a massive move into crypto, and what makes this so wild is that their CEO has been one of crypto's loudest critics. So, what is really going on here? Let's break it down.
So first, you have to know the main character in this whole drama. JPMorgan CEO Jamie Dimon. For years, this guy has just been dunking on Bitcoin. He's famously called it a pet rock. He is, without a doubt, the face of Wall Street skepticism. But this is where the story gets really good.
Yeah, you heard that right. Despite all of Dimon's public smack talk, his own bank is now seriously looking at offering crypto trading to its biggest institutional clients. And look, this is not a small deal. This is the kind of move that could create an earthquake in the industry, and it's coming from the very top of traditional finance. So, you've got to be asking yourself, what is the real story? Is Jamie Dimon suddenly changing his mind? Is the bank just going rogue against its own CEO? Or is there a much smarter, deeper strategy at play here? That's exactly what we're going to unpack. Okay, to really get this whole paradox, we have to look at how Jamie Dimon's public comments have actually evolved over time. It's a journey, let me tell you, from just outright hostility to something way more complex. So just look at this timeline. Back in 2017, he flat out called Bitcoin a fraud. He's compared it to the tulip bulb mania. And of course, there's the famous pet rock line. But lately, something really important has shifted. He started making a distinction. He's saying things like blockchain is real, and he's acknowledging that things like stablecoins have real utility. So he still hates the speculative tokens, like Bitcoin, but he sees the value in the tech underneath. And folks, that is the key to this entire puzzle. So how in the world is a bank run by a crypto skeptic actually planning to get into crypto trading? Well, they've got a very specific and I have to say pretty clever low-risk plan. They're not trying to build the next Coinbase or Kraken. No way. Instead, JPMorgan is looking to be an intermediary, basically a bridge. They'd take orders from their huge institutional clients and just pass them through to already established crypto exchanges. It's such a classic Wall Street move. Why reinvent the wheel when you can just integrate with it? And this comparison just lays it all out perfectly, right? Building a whole new exchange from the ground up is super expensive, it's risky, and it would put them in a head-to-head fight with the crypto giants. But being a bridge, that lets them jump into the market with way less risk and use all the infrastructure that's already been built. It is a really smart, careful way to get in the game.
And who would they actually partner with? Well, you've got to think about the big dogs, the players who are already focused on institutional clients. We're talking about firms like Coinbase Prime, Bullish, and Galaxy Digital. These are the companies that have the trading and custody systems ready to handle massive professional orders.
Now, a move this big from a player like JPMorgan, you know it's going to send ripples through the whole crypto industry. But the real question is, are those ripples a rising tide that lifts all the boats, or are they a giant disruptive wave? Turns out it's a bit of both. On one hand, this is a huge opportunity. It brings so much legitimacy to the space and opens the door for new partnerships. The crypto firms become the essential plumbing for Wall Street, which is a great business to be in. But on the other hand, it's a massive challenge. JPMorgan's entry is absolutely going to crank up the competition and probably squeeze the profits on basic trading services. But you know what? Overall, the vibe from market analysts is pretty positive. As Owen Lau from Clear Street puts it, JPMorgan getting involved would be a big positive. It just validates the entire asset class. It's like a giant stamp of approval that tells other conservative institutions, hey, the water's fine, you can come in now.
And that brings us to another really important question. Why now? I mean, after all these years of just watching from the sidelines, what's changed that's making Wall Street giants finally feel ready to jump in?
It really comes down to three key things. First, the regulators are finally starting to give clearer rules of the road. That's huge. Second, you just can't ignore the client demand anymore. Big money managers want access, and they trust their banks to give it to them. And third, the market is just, well, it's grown up. The plumbing, the exchanges, the custodians, it's all solid enough now for big institutions to rely on. And let's be super clear, this is not just a JPMorgan story. This is a Wall Street story. You've got their rivals like Morgan Stanley and Standard Chartered making very similar moves. This isn't just one bank dipping its toes in the water. This is a fundamental shift in how traditional finance sees digital assets. So now we get to the heart of the paradox. If the CEO hates Bitcoin, but the bank is trading it, what is the real long-term play here? Well, the answer goes way beyond just trading. This is how they solve it. This is the big reveal. Jamie Dimon can keep on criticizing speculative things like Bitcoin, while his bank goes all in on the blockchain technology underneath it all. The bank is separating the asset from the innovation. It's brilliant, really. It lets them have their cake and eat it too.
And they have a whole division dedicated to this, called Connexus. This is not some little side project. It's a full-on division focused on building real-world financial products using blockchain and tokenization. This is where the bank's real ambitions are.
And Connexus is already busy. I mean, really busy. They've issued bonds on the Solana blockchain, they're letting clients use Bitcoin and Ether as collateral for loans, they've launched their own tokenized funds and created programmable deposit tokens. See, this isn't about gambling on Bitcoin's price. This is about trying to rebuild the fundamental rails of finance.
So, when you put all of these pieces together, what does it all mean? What's the big takeaway from JPMorgan's crypto paradox?
Here's the most important point. The era of fighting over whether crypto is good or bad is kind of coming to an end. Institutional adoption isn't happening because people suddenly believe in a decentralized future. No, it's being driven by practical stuff. Client demand, finding new efficiencies, and meeting compliance rules. Wall Street is here to solve problems and make money, not to join a philosophical movement.
Which leaves us with one last massive question to think about. When giants like JP Morgan are building these bridges and weaving this technology into the very heart of their operations, is this the moment crypto stops being an alternative asset and just becomes finance?